Are you self-employed and want to buy real estate? No problem at all. Hey everybody, what's up? It's Jeff, the Mortgage Pro. Thanks so much for joining me on today's show. And today what we're looking at is self-employed borrowers who are buying property, whether it's a primary residence, a second home, or an investment property. Now, self-employed people have it bad because when they're trying to run their businesses, they always have really good accountants and they want to write off as much as they possibly can to minimize the tax that they pay at the end of the day. But in the traditional way for qualifying somebody as a self-employed borrower for a mortgage, we're only going to be able to lend on what that person pays taxes on. So oftentimes their income is minimized by the amount of money that they write off on their taxes, and it looks like it's a really low income. In reality, a better description of their cash flow is looking at the deposits that are coming in from their business and then using an expense factor ratio to be able to determine how much true income or true cash flow comes in. And that helps us with the ability to repay their mortgage. So in doing so with this is called the bank statement program loan. And these are ones that I'm starting to become really, really fond of because self-employed people have had a bad rap, especially over the last couple of years with COVID and all the repercussions of that. It was really hard for them to get loans. And even before that, after the financial crisis in 2008, it was still hard for self-employed people to get loans. So these are starting to become one of my favorite loans to do. It's called a bank statement loan. So let's go through some of the guidelines here to be able to tell you about how you could qualify for one of these things if you were going to use a bank statement loan to qualify. So first of all, we have loan amounts. And these are kind of a combination of various programs, by the way. We have loan amounts up to $3 million. So usually if you're a business owner, and some high net worth business owners will go that high in terms of their loan amount, but you can go up a little bit higher if you needed to, but 3 million is typically around the max. These are for purchase loans, refinance loans with the rate and term, just lowering the interest rate, as well as cash out refis. So all three different types of loans that you can do with these are not just for purchases, they're for any type of loan that you do. So if you already have a property and you're self-employed and maybe you wrote off a whole bunch of stuff last year, but you can show that you have cash flow coming in, you can still get a loan. We have two different types of programs, a 12-month bank statement program and a 24-month bank statement program. These can be either personal bank statements, depending on what type of business you have, or business bank statements, depending on what type of business you have. And the only difference is that if we're looking back 24 months, it's going to give us an even steadier description of what your income is. And there's a benefit for you for doing that in terms of pricing. It's going to be a little bit better with the 24-month bank statement program than it is with the 12-month bank statement program. But for the most part, 12-month bank statement program is what most people go with. So make sure to check with myself or your loan officer if you're doing one of these programs, which one is going to be best for you. There's both 30-year fixed options available and ARMs. So depending on your scenario and what you want to do, you can take a look at either of those different options and we can help you qualify. There's an interest-only option available, which I really like because especially in this higher interest rate environment, if we can get your payment down just a little bit compared to what those rates are going to look like on just a regular 12 or 24-month bank statement program, we want to be able to do that. So let's get it down with an interest-only option if that's possible for you. You can have as little as 3 months reserves. So reserves are it's a calculation of how much is left over after you buy your house. So down payment plus closing costs, what money do you have left over? It could be in some sort of a retirement account, it could be stocks, it could be cash. Just depends on what we're looking for. We have to have at least 3 months worth in most instances. More likely 6 months reserves is probably more favorable, but as little as 3 months. We can go up to 90% LTV. So if you're purchasing a property, you can put as little as 10% down using a bank statement loan to qualify for a property. And again, these go up to $3 million. So if you can imagine 10% down on a $3 million loan, you probably have some pretty good cash flow if you're going to buy something like that. First-time home buyers are okay. So this is one of the things that was limited on these before, but now they've kind of opened it up a little bit and say, hey, look, this is a good way for people to qualify. You can actually buy a home using your bank statement program as a first-time home buyer. So you can buy primary residences, you can buy second homes, you can buy investment properties with these types of programs, which I think is really beneficial because just because you're self-employed, you shouldn't be able to limit yourself to second homes or investment properties. So you can buy all three of those types of properties. So we can do credit scores down to 640. Obviously, the higher the credit score, the more preferential the interest rate is going to be for you. But in times of credit crunches, that you have a lower credit score, you can still get a loan in a lot of these instances. And then here's a kicker. Most people, when they qualify for a loan, typically have to have at least 1 year when you're self-employed, but preferably 2 years or 18 months or more with conventional and conforming loans. But with this, you can have as little as 1 year of being self-employed. And that's not in all investors' guidelines, but is in some of them. So if you've only been self-employed for a year, you have really good cash flow, you can still buy a home right now. Okay, so bank statement loans, if you're self-employed, you can still buy real estate, and I want to help you do that. My name is Jeff, and I'm Jeff the Mortgage Pro. Please reach out to me, and I look forward to chatting with you really soon. Have a good one.